Welcome to Explain the Charts, where we break down the market's movements, connecting news and chart patterns for actionable insights. Today, October 15th, 2024, we're diving into Tesla stock, exploring recent events and news to understand the current market sentiment and pinpoint key price levels to watch. Let's begin by examining the latest news surrounding Tesla. Recent headlines have focused on the company's robotaxi event and the subsequent stock sell-off. Investors were disappointed with the lack of details on the cybercab and robovan, particularly the absence of an affordable model, which is crucial for Tesla to maintain its delivery levels in 2025. Wall Street analysts expressed concerns about the lack of updates on near-term growth opportunities and data on the robotaxi service's economics and strategy. These concerns, coupled with Tesla's third-quarter delivery figures, which fell below market expectations, have led analysts to predict downward pressure on Tesla shares in the coming quarters. However, despite the sell-off, some investors remain optimistic about Tesla's long-term prospects. They highlight the company's strong job growth data, which exceeded expectations and supports the Federal Reserve's soft landing narrative. This narrative suggests controlling inflation without harming the economy, which could benefit Tesla's stock in the long run. Tesla's shares are volatile, with 96 moves greater than 2.5% in the past year, making it a high-risk investment. While the recent sell-off has pushed the stock down, it's still trading at a high price-to-earnings ratio, indicating investor expectations of significant future growth. This growth is largely dependent on Tesla's success in self-driving, robotics, and artificial intelligence. Now, let's move on to the chart data to see if it aligns with the news. Looking at the daily chart for Tesla, we see a clear downtrend over the past few months. The stock has been consistently breaking below key support levels, most recently breaking through the 250 level, which now acts as resistance. The 210 level is a significant support level, which the stock has tested several times in recent weeks. If the stock breaks below this level, it could see further downward pressure. However, there are signs of potential bullish sentiment emerging. For example, we can see a bullish hammer pattern around the 205 level. This pattern signals a potential reversal and could lead to a price bounce. The daily chart also suggests a potential double bottom pattern around the 200 level. This pattern suggests a potential reversal and could lead to a price bounce, but it's important to note that it's not a confirmed pattern yet. Let's dive into the 1-hour chart to see if it offers any further insights. Switching to the 1-hour chart, we can see a more detailed view of the recent price action. The stock has been consolidating around the 215 level for the past few days, suggesting indecision among traders. The 1-hour chart also shows a potential head and shoulders pattern forming. This pattern is a bearish signal, suggesting a continuation of the downtrend. If the stock breaks below the neckline of this pattern, which is around the 210 level, it could accelerate the decline. However, we also observe a potential bullish divergence, where the price is making lower lows while the RSI is making higher lows. This divergence suggests that the selling pressure might be weakening, indicating a potential bounce. Let's examine the 15-minute chart to gain a more granular understanding of the short-term price action. Zooming into the 15-minute chart, we can see more clearly the volatility of the market. The price is fluctuating rapidly, suggesting a lot of indecision among traders. The 15-minute chart does not reveal any major trend reversals or significant patterns, but it highlights the fast-paced and volatile nature of Tesla stock. The recent news surrounding Tesla's robotaxi event and the mixed market sentiment is reflected in this volatile price action. To better understand the short-term price action, let's zoom in on the 15-minute chart, focusing on the last 24 hours. The stock has been trading in a range between the 215 and 220 levels over the past 24 hours, indicating a struggle between bulls and bears. We can see several whipsaw movements within this range, which suggests a lot of indecision and volatility. The short-term price action is not conclusive, but it highlights the importance of remaining alert for any potential breakouts or breakdowns. A break above the 220 level could signal a bullish reversal, while a break below the 215 level could confirm the continuation of the downtrend. The 15-minute chart also shows a potential rising wedge pattern forming. This pattern is generally considered a bearish signal, indicating a potential for the stock to fall. However, it's crucial to consider the larger context and patterns on the daily and 1-hour charts. Based on our analysis, it's difficult to definitively say whether Tesla is bullish or bearish in the short term. The stock is facing mixed signals, with both potential bullish and bearish patterns emerging. The recent news surrounding Tesla's robotaxi event has created uncertainty in the market. The short-term price action is heavily influenced by this uncertainty. Traders should be cautious and pay close attention to the key price levels and patterns discussed. Here's a recap of the crucial price levels and patterns to watch. On the daily chart, the 250 level is a significant resistance level, while the 210 level is a crucial support level. A break below this level could trigger further decline. The daily chart also suggests a potential double bottom pattern around the 200 level, which could signal a bullish reversal, but it's not confirmed yet. On the 1-hour chart, the 215 level is a key resistance level, while the 210 level acts as support. The stock is consolidating around these levels, indicating indecision among traders. The 1-hour chart also shows a potential head and shoulders pattern, which is a bearish signal, but it's important to note the potential bullish divergence, which suggests weakening selling pressure. On the 15-minute chart, the stock has been trading in a range between the 215 and 220 levels for the past 24 hours, highlighting the volatility and indecision in the market. A break above the 220 level could signal a bullish reversal, while a break below the 215 level could confirm the continuation of the downtrend. The 15-minute chart also shows a potential rising wedge pattern, which is a bearish signal, but it's crucial to consider the larger context and patterns on the daily and 1-hour charts. In conclusion, TSLA's price action is currently exhibiting mixed signals, making it a high-risk investment. Traders should stay informed of the latest news and carefully monitor the key price levels and patterns discussed to make informed trading decisions. Remember, these are just potential predictions, and the market can be unpredictable. Always do your own research and consult with a financial advisor before making any investment decisions.